Welcome. Today, we are going to explore the time price opportunity strategy, also called the TPO strategy. This approach can help you understand the market better and give you a powerful way to improve your trading. By the time we finish today, you will know how to use the TPO strategy to find key price levels and discover trading opportunities that can lead to better decisions. I promise that by the end, you will feel more confident about your next steps. Let us jump right in. Are you ready to uncover a strategy that can transform the way you understand market behavior? Picture this. Instead of just seeing price movements, you gain insights into where the market truly finds value. This is what the time price opportunity strategy, or TPO strategy, is all about. By focusing on how much time the market spends at different price levels, you can uncover the key zones where buyers and sellers find equilibrium. This may sound simple, but it is incredibly powerful. By knowing where the market spends the most time, we can identify value areas, places where prices are likely to revisit, and where meaningful trading decisions can be made. Imagine trying to understand the patterns of a busy street. The longer people linger in specific spots, the more significant those places become. The TPO strategy helps us pinpoint those key market spots, giving you an edge in your trading decisions. Now, let us expand on the different chart patterns that are often visible when using the TPO strategy. Recognizing these patterns can help you identify significant trading opportunities and manage your trades effectively. One important pattern to watch for is the *** double distribution trend day ***. In this pattern, the market shows two distinct value areas separated by a sharp price movement. This suggests that there was a change in sentiment during the trading session, often indicating a significant shift in control between buyers and sellers. The first distribution typically represents an initial phase of market consensus, while the second distribution forms as new information or market dynamics cause traders to reassess value. When you see a double distribution, it often means that there is strong interest at both value areas, and traders can watch for breakouts from either distribution. Typically, if price breaks away from one of these areas, it can lead to a substantial move, providing an opportunity for traders to capitalize on the market's strong directional intent. The areas between the two distributions can also act as a pivot zone, where price may briefly consolidate before choosing a direction, offering additional trading opportunities for those watching closely. Another key pattern is the *** balanced or normal day ***. This pattern forms when the market has a balanced profile, indicating that buyers and sellers agree on fair value, resulting in a bell-shaped TPO profile. This type of day suggests a lack of strong direction, and traders often look to trade reversions to value, buying at the lows and selling at the highs of the value area. We also have the ** P-shape and B-shape profiles ***. A P-shape profile indicates that there was a strong rally followed by consolidation. This often happens after a bullish breakout, and traders look for potential continuation of the trend or a pullback to key levels. Conversely, a B-shaped profile suggests a sell-off followed by consolidation, which is often indicative of potential accumulation by buyers at lower prices. Recognizing these shapes can help you understand whether the market is in an accumulation or distribution phase. Another interesting pattern is the ** trend day ***. On a trend day, the profile stretches consistently in one direction without much retracement. This indicates a strong trend with conviction from traders. A trend day typically starts with a strong movement early in the trading session, with the price continuing to move in that direction throughout the day, often closing near its extreme. On such days, breakouts from the initial balance are significant as they provide an early signal that a strong directional move is underway. Traders look to ride the trend as long as possible, often using retracements to key levels, such as single prints or areas of previous consolidation, as opportunities to enter trades. Entry opportunities are often found when the price revisits previous single prints or pauses briefly, as these pauses may indicate temporary profit taking before the trend resumes. Additionally, using moving averages can be helpful during trend days to stay in trades, as price often remains above or below these averages depending on the trend direction. Observing volume is also crucial, as increasing volume supports the strength of the trend and gives traders confidence in holding positions. Finally, there is the ** neutral day * pattern. On a neutral day, the market moves both above and below the initial balance, but ultimately returns to a balanced state. This indicates indecision among buyers and sellers. Traders often look for reversion trades on these days, using value area highs and lows as entry and exit points. Let me break this down for you. Each TPO chart is made up of letters or blocks that represent specific times, like 30 minutes, for example. The more letters or blocks that are stacked at a particular price level, the more time was spent there. This makes that level significant. These levels often show us areas where buyers and sellers have decided prices are fair and worth their attention. Another important idea is something called the value area. This is the price range where about 70% of the trading activity took place. Traders use this range as a guide to where the market sees fair value. Think of it as the main playground where most of the action happens. If price moves away from this area, it can become very interesting to watch what it does next. We also have what is called the point of control. This is the price level that has the most TPOs or the most time spent there. You can think of it like the anchor or the heart of the trading day. It is a level that often draws prices back towards it. Many times the market views this level as a fair place to trade, which means it acts almost like a magnet. When using the TPO strategy, identifying the key price levels is very important. There are a few levels that really matter here. First, we have the value area high and value area low. These two levels mark the top and bottom of our main area of action. Price often bounces or reacts at these levels, so keeping an eye on what happens here is critical. In addition to these levels, understanding different chart patterns that form around them can further improve your trading decisions. One of these patterns is the ** double distribution trend day **. This occurs when there are two distinct areas of value separated by a sharp price movement. It suggests a change in market sentiment and often leads to further opportunities as traders assess whether the move is sustainable. Another significant pattern is the ** normal distribution day **. This is when the TPO profile takes on a bell shape, indicating agreement between buyers and sellers. The price typically moves within the value area, and traders use this pattern to look for reversion, trades buying near the value area low and selling near the value area high. There are also **, P-shaped **, and **, B-shaped ** profiles that traders should recognize. A P-shaped profile represents a strong rally followed by a consolidation phase. This usually occurs after a breakout and indicates a bullish bias. A B-shaped profile, on the other hand, suggests an initial sell-off followed by accumulation, signaling potential support areas where buyers may be stepping in. Another key pattern to recognize is the trend day characterized by a TPO profile that stretches in one direction with little retracement. This indicates strong market conviction, and traders often look to join the trend when price revisits key levels such as previous single prints. Lastly, neutral days occur when price moves both above and below the initial balance before returning to a balanced state. This type of day shows indecision and provides opportunities for trading both ends of the value area as the market looks to establish direction. Then there is the point of control, or POC. This is a level that many traders use as an entry or an exit point. It is where the most time was spent, and when price gets close to this level, traders are often looking for some kind of movement. It might bounce back or break through, which can give traders a good idea of what to do next. We also have single prints, which are spots on the chart where price moved quickly without spending much time. These often show areas of strong moves. When price revisits these levels, they can become strong zones for support or resistance. It is kind of like a ghost of a move that happened before and could play a role again. So how do you spot trading opportunities with the TPO strategy? Let me give you a couple examples. One common setup is called reversion to value. Imagine price breaks out of the value area but later moves back in. When this happens, traders often watch for price to rotate all the way through to the other side of the value area. It is like watching a ball bounce off a wall and roll across the entire room. This is a pattern that happens again and again, and it can be very reliable. Another setup is watching for breakouts from the value area. When price breaks above or below the value area, it can be the beginning of a big move in that direction. The key here is waiting for confirmation. Do not just jump in, but watch for price to prove itself. These breakouts can be exciting, but remember, patience can be your best friend. Something else to watch is the initial balance. This is the price range set during the first hour of trading. If price breaks out of this range, it can be a signal that we might see a bigger move. However, if price stays inside this range, it could mean the day will be more neutral and less eventful. Now let us talk about when to enter and when to exit trades. For entries, watch when price is getting close to important levels like the value area high, value area low, point of control, or other significant chart patterns such as single prints, double distributions, trend days, P-shaped profiles, B-shaped profiles, and neutral days. You can look for a chance to buy if price bounces off the value area low, or if it breaks above the point of control and shows signs of continuing. Another opportunity may arise if you see a double distribution pattern indicating strong interest at two separate levels, which could suggest the potential for a breakout. During P-shaped profiles, entries are often taken when price pulls back to the consolidation area after an initial strong upward move, indicating the continuation of a bullish trend. In contrast, during B-shaped profiles, entries can be made when price shows signs of accumulation at the lower levels, signaling potential support and an impending reversal. Similarly, during trend days, price may move consistently in one direction, and revisiting single print areas can offer good entry points for traders to ride the trend. On neutral days, traders can enter trades when price approaches the value area high or low, aiming for reversions to the mean. The same is true in reverse if price is coming down, using these key levels to look for sell opportunities. For exits, you can use those key levels as well. If you bought at the value area low and price is now nearing the value area high, it might be time to take your profit. The point of control can also be a good level to exit a trade. Just remember that each level can provide a different reason for a decision. And of course, we need to talk about stop losses. These are so important to protect your trades. When using the TPO strategy, place your stops just outside the value area or just below the initial balance. This will help protect you if the price moves against you in a strong way. Now, how do you make the TPO strategy even stronger? You can combine it with other tools. One tool that works really well with the TPO strategy is called the volume profile. This tool shows how much volume was traded at different price levels. When the volume profile lines up with the TPO analysis, it can give you extra confidence in your trades. You can also add moving averages to your chart. Moving averages help confirm trends. If price is above both the point of control and a moving average, then it is a good sign that the trend will continue in that direction. It is like using multiple clues to solve the same mystery. Another useful tool is a momentum indicator like the relative strength index. The relative strength index shows if the market is overbought or oversold. If the relative strength index agrees with what you're seeing on the TPO chart, it can give you more confidence that the move is strong and worth trading. Let us talk about some practical tips. Focus on the value area. This is where most of the action happens, and it is the most reliable place to look for trades. Watch how price behaves near the value area, high and low. These are some of the best places to find opportunities. It is also helpful to be aware of specific chart patterns that develop around these areas. For instance, if you notice a *** double distribution trend day ***, where the market forms two distinct areas of value separated by a sharp price move, this can indicate a change in market sentiment and could provide strong breakout opportunities. A *** balanced day ***, characterized by a bell-shaped TPO profile, often presents reversion opportunities, allowing traders to buy near the value area low and sell near the value area high. Look for ***, P-shaped ***, and ***, B-shaped *** profiles as well. A P-shaped profile suggests a strong upward movement followed by consolidation, typically signaling that the market may continue its upward trend or pull back to key support areas. A B-shaped profile indicates a significant sell-off followed by some stabilization, hinting at potential accumulation by buyers at these lower levels. On a *** trend day ***, when the TPO profile stretches consistently in one direction, traders can use retracements to single print areas as potential entry points. This pattern signals strong conviction from either buyers or sellers, and being able to spot these days can help traders make the most of strong trending moves. On ***, neutral days ***, where price moves above and below the initial balance but ultimately returns to a balanced state, traders often find good opportunities for reversion trades within the established value areas. These are some of the practical ways to expand your approach to using TPO for trading effectively. Also, pay attention to reversion to value. If price breaks out but then moves back in, watch for it to rotate through the entire value area. This is a solid opportunity that traders often capitalize on. It is all about watching and waiting for the market to tell you what it is about to do. Do not forget to track the initial balance. The initial balance represents the range established during the first hour of trading. When price breaks out of the initial balance, it can often lead to strong directional moves, indicating a trend may be forming. This breakout can be a signal to enter a trade in the direction of the move, especially if other indicators align. Conversely, if price stays within the balance for the entire day, it often suggests a more neutral or range-bound session with lower volatility. Understanding how price behaves around the initial balance helps set your expectations for the trading day and gives you an idea of whether the market is likely to be trending or consolidating. Additionally, watching how price reacts to the initial balance boundaries can offer clues on potential reversals or continuations, making it an essential part of the TPO strategy. Now there are also some common mistakes that traders make with the TPO strategy. The first mistake is overreacting to every small move. Just because price pokes outside the value area does not mean it is a significant event. Be patient and wait for confirmation before making your move. This will save you from many false starts. Another mistake is ignoring the bigger market picture. Always remember that broader market trends and economic news play a role in price behavior. If there is important news that day, it can completely change how the market reacts to key TPO levels. Lastly, make sure you always use stop losses. Skipping this step is one of the biggest mistakes you can make. Especially with breakout trades, you want to protect yourself if things do not go as planned. Stop losses are there to help you manage your risk. If you are new to the TPO strategy, I suggest starting with a demo account. This way you can practice finding those key levels, identifying various chart patterns, and trying out different trade setups without risking your own money. Practice recognizing double distribution, trend days, balanced days, P-shaped and B-shaped profiles, and other significant patterns that we discussed earlier. Keep a journal of your trades so you can learn from each experience. Write down what worked, what did not, and what patterns you observed during the trades. This includes noting whether the market displayed any of the discussed profiles and how price reacted to the key levels. Learning from both wins and losses is the key to getting better. Another good way to practice is to experiment with different time frames. Look at daily, weekly, and even intraday TPO charts. Try to find what works best for your trading style. The more you explore, the more you will find your own preferences. To recap, the TPO strategy helps you identify important price levels like the value area, the point of control, and single prints. Understanding these levels can lead to high probability trade setups that make sense. Start by adding TPO analysis to your charts. Pay special attention to those key levels and use additional tools like volume profiles and moving averages to build stronger trading setups. The TPO strategy can give you a deeper look into how the market works and help you make better decisions as a trader. Keep practicing and keep refining your approach. As you get more comfortable, this strategy will become an important part of your trading toolkit. If you have questions or comments about anything we talked about today, make sure to reach out and continue the conversation. I look forward to hearing how it goes for you.